Karthik, beating all expectations there. The numbers for Q2 are astounding.
Oh, absolutely. I think any economist we've spoken to, any analyst we've got on the show, or even the ratings that have come from agencies, including the Reserve Bank of India as well as IMF and so many others, nobody had actually predicted the number to go beyond 8%. In fact, the highest that I had come across was about 7.6%. Look at the SBI research number at about 7.5%. So 8% and anything beyond was totally unexpected, and it seems that the Indian economy has literally hit the ball out of the park this time. And one was actually assuming that 7.8 in Q1 is pretty much, the highest that one can go to in this environment that we are in, given all the geo-economic uncertainties and the fact that, even the GST reforms came in much later in the year. One wasn't expecting the number to beat Q1's, in any case, stupendous 7.8% growth rate, but coming in at 8.2% now averages the first half of the year to squarely 8%. So it's 7.8% in Q1, 8.2% in Q2. Divided by 2, you're looking at 8% growth rate for the fastest growing economy anyway in the world for the first half of the year, Shweta.
All right. And what led to this growth? I think it's important to also understand that. Numbers are still trickling in, but manufacturing there picked up massively by 9%, 9.1%. That's the number as far as manufacturing is concerned. And consumption is expected to have picked up, albeit only in the last week of September.
You're right. So, the last week of September is when the consumption activity would have really taken off, because we were just at the cusp of the festive season, and the GST rationalization and the rate reduction that people saw would have given that last minute fillip of maybe, 10 basis points, 15 basis points or so to the GDP. But up until the numbers were released, I think the assumption was that rural consumption was on the uptick, and we had also seen the government's own capital investments going up for the first half, for the first quarter and the second quarter of the year. But right now what we are seeing is a massive jump in manufacturing, which is coming in close to double-digit growth. It's coming in at 9.1%. It seems that the animal spirits that one had always wanted the private sector, the corporate sector to unleash have finally been unleashed in quarter two. In fact, I was speaking to an economist earlier in the day, Teresa John from Nirmal Bang. She's a lead economist at Nirmal Bang. And data was suggesting that there has been a pickup in private sector capital investments as well. And that is something which seems to be relevant right now, because we are looking at the manufacturing sector growing 9.1%. More than that, I think it's also important to know that potentially the schemes around semiconductor manufacturing, PLI schemes, and of course all the stories that we've done of Apple doubling down its manufacturing in India, all of that is coming to fruition at a point now that we are seeing these numbers add up, Shweta.
All right, and as more numbers come in, the tertiary sector is expected to have grown by 9.2%, which includes a growth in trade, hotels, transport, communication, and services related to broadcasting. Also looking at numbers coming in for financial, real estate and professional services sector, recorded a growth of 10.2% in September quarter, as against 7.2% in Q2 of the previous fiscal year. So wonderful, great numbers there that could have driven India's GDP growth momentum the economy on a steady footing. And as I said, nobody could have expected this, Karthik, because every person we have spoken to so far, from economists to analysts, predicted that perhaps 7.5% could be the growth, the fastest growth at which economy could grow in Q2.
Yeah, you're quite right, Shweta. But, I think what I'd like to see this through the prism of is the fact that imagine attaining this number, 8.2%, at a time when the country has been slapped with among the highest tariffs in the country. Now, remember, the 50% tariffs kicked in much later, but we were still looking first at 26% tariffs, then at 25% tariffs. And there's enough data to suggest that India's exports, especially to the US, have slowed down. So despite the slowing down of India's exports to the US, despite India importing a huge quantity of gold, disrupting that net import, net export figure which goes into the formula of the GDP, you've still been able to manage a growth rate of 6.2%, where you were tariffed, where oil prices were volatile, where gold imports were high, and where your own exports to other countries, especially the US, which happens to be our biggest trading partner, were curtailed in this tariff environment and in these headwinds that the Indian economy has faced, given all the geoeconomics that we've seen ever since Donald Trump has come into power. So 8.2% could have been literally a much higher figure had it not been for all these headwinds.
And capital expenditure, as you pointed out, by the government climbing by 31% in September quarter. What's also surprising is exports rose by 8.8%, reversing a 7% drop in the corresponding period a year ago, basically lifted by front loading of shipments to the US ahead of the tariffs kicking in. So great numbers there. We'll try and decode them through the day. Thank you very much, Karthik. But moving on now.